5 massive AI stories you shouldn't miss today. First, NVIDIA has been building a $30 billion networking business that nobody's talking about. It's now bigger than most tech companies' entire revenue, and it's growing 27% year over year. Second, Tencent just posted a 13% revenue jump, and AI is the reason. Their AI gaming tools and cloud services are printing money. China's AI economy is accelerating fast. Third, the Financial Times just exposed the real AI job displacement numbers. It's not what you think. White-collar workers in finance, law, and management are getting hit hardest, not blue-collar workers. Fourth, the Washington Post created an interactive tool showing exactly which jobs AI will replace first. You can look up your specific job title. Some of you are not going to like what you see. And fifth, a startup called Replit just raised $100 million to turn all enterprise software into a chatbot. No more clicking through menus, just type what you want. I'm Alex, this is the Read AI, and if you want to know what's actually happening in AI, not just the hype, you're in the right place. Let's go. Everyone knows NVIDIA for GPUs, H100s, Blackwell chips, the hardware powering every AI model. But here's what a lot of people miss. NVIDIA has been building a networking business that's now generating $30 billion in annual revenue. To put that in perspective, that's bigger than AMD's entire revenue, bigger than Airbnb, bigger than Spotify. It's a Fortune 500 company hiding inside NVIDIA, and it's growing 27% year over year, faster than the chip business in some quarters. TechCrunch just published a deep dive on this, and the numbers are staggering. Let me break down what's actually happening. So what is this NVIDIA networking business? It's the technology that connects all those GPUs inside data centers. When Meta builds a data center with 100,000 H100 chips, they need networking gear to make those chips communicate at insane speeds. NVIDIA makes 3 main products. First, InfiniBand. This is high-speed networking specifically designed for AI training. It moves data between GPUs at 400 gigabits per second. That's about 4,000 times faster than your home internet. Second, Spectrum Ethernet switches. These connect data centers to the outside world and handle internal traffic that doesn't need InfiniBand's extreme speed. Third, BlueField DPUs, data processing units. These offload network tasks from CPUs so your processors can focus on AI workloads instead of shuffling data around. Now, here's the brilliant part. When you buy NVIDIA GPUs, you almost always buy NVIDIA networking gear too, because they're optimized to work together. So NVIDIA isn't just selling the chips, they're selling the entire infrastructure stack. Why does this matter? Because NVIDIA just created a second business line that's nearly as defensible as the GPU business. Competitors like AMD and Intel are trying to compete on chips, but even if they build competitive GPUs, customers still need NVIDIA's networking to connect them efficiently. And switching networking infrastructure is expensive and risky. Once you've built a data center on NVIDIA networking, you're locked in. Microsoft, Meta, Google, Amazon, they've all standardized on NVIDIA's networking stack. That's billions in recurring revenue that's incredibly sticky. Here's the revenue breakdown from their latest earnings. Data center revenue, $113 billion annually. About $30 billion of that is networking. That's over 26% of data center revenue, and it's growing faster than analysts expected. Last quarter, networking revenue grew by 27% year over year, while GPU revenue grew by 23%. So why isn't everyone talking about this $30 billion business? Because NVIDIA doesn't break it out in detail. They report data center revenue as one big number. Networking is buried inside that. You have to dig through investor calls and presentations to find the networking numbers. Most media coverage focuses on GPUs because that's the sexy story. But here's what the smart money knows. NVIDIA's networking business is why their moat is so much deeper than people realize. Even if competitors catch up on chips, and that's a big if, they're still years behind on networking. And you can't just buy networking technology. You have to build an ecosystem, integrate with existing infrastructure, convince customers to switch. That takes time, lots of time. So while everyone's focused on the GPU race, NVIDIA has quietly built a second $30 billion fortress that makes their competitive position even stronger. And here's the kicker. As AI data centers get bigger, networking becomes more important, not less, because connecting 100,000 GPUs is way harder than connecting 10,000. NVIDIA isn't just winning the chip war, they're winning the infrastructure war, and that $30 billion networking business is a huge reason why. All right, that's NVIDIA. Let's talk about what's happening in China. This morning, Tencent reports earnings, revenue up 13% year over year. That's the fastest growth in 2 years. The reason? AI, specifically AI in gaming and cloud services. Now, most people think of Tencent as that Chinese company that owns League of Legends and WeChat, but they've been quietly building AI infrastructure for years, and it's starting to pay off big time. Let me break down what they're doing that's actually generating revenue, not just burning cash on research. First, AI-powered game development tools. Tencent has over 140 games in development. Traditionally, making a game takes hundreds of people and years of time. They've built AI tools that automate asset creation, generate game environments, write NPC dialogue, and even test gameplay balance. The result? They're producing games 40% faster with 30% fewer people. And here's the important part. They're not just using this internally. They're licensing these tools to other game developers across Asia. That's new revenue, and it's high-margin revenue, because once you build the tool, every additional license is almost pure profit. Their AI-generated content tools for WeChat are taking off, too. Businesses are using Tencent's AI to create marketing materials, customer service chatbots, and automated content at scale. Second, Tencent Cloud's AI services. They're offering AI infrastructure to Chinese companies that can't access AWS, Google Cloud, or Azure at scale because of regulatory restrictions. Chinese companies need AI compute. Tencent is providing it, and they're bundling it with models, training services, and deployment tools. Their cloud revenue grew by 16% this quarter. Most of that growth is AI workloads. They're also doing something smart, building industry-specific AI solutions. AI for retail, AI for manufacturing, AI for healthcare, pre-built solutions that companies can plug in without needing their own AI teams. That's a huge market in China because most companies don't have the talent to build AI from scratch. Here's why Tencent's earnings matter beyond just one company. China's AI economy is accelerating. While the U.S. has been focused on foundation models and AGI research, China has been focused on making AI that generates revenue now. Tencent isn't building the next GPT-6. They're building AI tools that game developers, businesses, and cloud customers will pay for today. And it's working. 13% revenue growth in a slowing Chinese economy is impressive. The other thing to watch, Tencent is doing this despite U.S. chip restrictions. They can't buy the latest NVIDIA H100s. They're using older chips and compensating with better software and optimization. If Chinese companies can generate this kind of AI revenue with restricted access to cutting-edge chips, what happens if those restrictions ever loosen? That's the question U.S. policymakers should be asking. All right, let's talk about the story everyone's avoiding. Which jobs is AI actually taking?
The Financial Times published an investigation that's getting buried because nobody wants to talk about what it actually says. The headline, white-collar workers face biggest threat from AI automation. Not factory workers, not truck drivers, not retail workers. White-collar professionals in finance, law, consulting, and management. They analyzed data from the OECD, McKinsey, and Goldman Sachs. They looked at which job tasks AI can actually automate today, not in the future, today. The results are shocking. Financial analysts, 46% of tasks automatable right now. Paralegals, 44% of tasks automatable. Management consultants, 40% of tasks automatable. Accountants, 38% of tasks automatable. Compare that to construction workers, 6% of tasks automatable. Plumbers, 4% of tasks automatable. Electricians, 7% of tasks automatable. The people who thought their college degrees made them safe, they're the most exposed. So why are white-collar jobs more vulnerable than blue-collar jobs? Because AI is really good at information processing, analysis, pattern recognition, and document generation. That's what knowledge workers do all day. AI is terrible at physical manipulation, spatial reasoning in unpredictable environments, and tasks that require real-world adaptation. A paralegal reads documents, identifies relevant clauses, summarizes findings. AI can do that. A plumber diagnoses a leak in a wall, figures out how to access it without destroying the house, and fixes it with their hands in a tight space. AI can't do that. Financial analysts build Excel models, write reports, make recommendations based on data. AI can do that. Construction workers operate heavy machinery, solve on-site problems, coordinate with teams in noisy environments. AI can't do that. The pattern is clear. If your job is primarily cognitive and happens on a computer, you're exposed. If your job is primarily physical and happens in the real world, you're safer. Now, the Washington Post took this further. They built an interactive tool where you can type in your job title and see your AI exposure score. I ran a bunch of jobs through it. Financial analyst, 78% exposure. Lawyer specializing in contracts, 71% exposure. Marketing manager, 65% exposure. Graphic designer, 62% exposure. Software developer, 58% exposure. Compare that to electrician, 12% exposure. Nurse, 18% exposure. Plumber, 9% exposure. HVAC technician, 11% exposure. The jobs people told their kids to study for, finance, law, consulting, are the most at risk. The jobs people look down on, trades, healthcare, physical services, are the safest. Here's what this data is telling us. The AI displacement story is the opposite of what we expected. We thought automation would hit low-skill jobs first and work its way up. That's what happened with previous waves of automation. But AI is different. It's hitting high-skill cognitive jobs first and might eventually get to physical jobs, but that's much harder and further away. So the advice we've been giving young people for 20 years, get a college degree, go into finance or law or consulting, you'll be safe, that advice is now backwards. The electrician who didn't go to college and has $0 in student debt, more secure than the lawyer who has $200,000 in loans. And this isn't speculation. This is happening now. We covered Meta laying off 20,000 workers last week. Most of those jobs, knowledge workers whose tasks can be automated. The economy is restructuring in real time, and a lot of people don't see it coming. All right, let's wrap. 5 huge stories today. 1. NVIDIA's secret $30 billion networking empire, bigger than most tech companies, growing 27% annually and deepening their moat even further. 2. Tencent's 13% revenue surge driven by AI gaming tools and cloud services, showing us what China's AI economy actually looks like when it focuses on revenue instead of research. 3. The FT investigation revealing white-collar workers, finance, law, consulting are the most exposed to AI displacement, not blue-collar workers. The college degree isn't protecting you anymore. Plus 2 bonus stories, the Washington Post's AI job exposure tool, where you can check your specific job title, and Replit raising $100 million to turn all enterprise software into chatbots. If you want full deep dives on any of these, drop a comment and let me know which story you want next. And here's the big picture. NVIDIA is building an infrastructure empire. China is making AI profitable today, and the jobs we thought were safe are the most vulnerable. This is moving fast. If you want to stay ahead of what's actually happening in AI, subscribe to The Read AI, new episodes breaking down the stories that actually matter. I'm Alex. Thanks for watching. See you in the next one.